All right. Uh, what's up? Waiting me time now. 12. Oh boy. 12 on it's just 12 and I don't even feel like to sleep. So sure we'll do support and resistance. We did demand and supply, right? So now we are going to do support and resistance and how to identify support and resistance. And then we'll talk about break of structure. Maybe a little, we'll talk about break of structure. That last video was very long. We no like am like that. So I will try make this one short. But before then, make I rephrase all my dis thing. See my chart now dey green and red. So we talked about some time ago, we talked about candlestick. What do we say? If a candle is green, according to this chart now, if the candle is green, it means price is going up. If it's red, price is going down. Candlesticks just shows us price behavior per time. If it's on the 24-hour time frame, it's showing us the behavior. Every candle here is showing us what's happening in 24 hours. If it's in a 4-hour time frame, every candle is showing us what's happening in 4 hours. Abi how we take put am? So this candle is telling us what's happening, abi what happened day before yesterday. Then this one is telling us what happened yesterday. So by 1 o'clock, we'll have a new candle. You get? So this one is telling us what happened. This no like this. So this one is telling us this one told us what happened. Is this Sunday now? Be Saturday. It is telling us that on Sunday price moved up to this point. So yeah. Then we'll say this in the record. Okay. Then um uh sales I don't miss my mark now. So yeah, then we have weeks. Weeks tells us the highs, the points, abi the height of where price reach. So let's say this is our candle and this is a week and we have another week here. And if this is a bullish candle, that it means bullish candle means a candle that is going up, bearish candle means candle that is going down. If this is a bullish candle, this place, this downside, the beginning of the body, this fat one is the body, then the slim things are the wicks. If this is a bullish candle, this candle definitely starts from this level. The logic of things going up is they start from the bottom to the top. So the open of this candle will be this place, and then the close will be this place. Then what's the function of the wick? The wick is trying to tell us the peak of price movement, the peak of the candle. So if it open here, it means it went down to this place first before it push up to this place, then down to this place before it close. Open here, reach here, went back up to this place, came back to this place, then close. So yeah, rephrasing. Then what again? So we talked about supply and demand, but we said where you identify a place of supply is where you see a rapid move to the upside or a downside after consolidation. Right. Let me go to a 4-hour time frame so we see this clear. Okay, we talked about market structure first. Market structure is the general direction of the market. So for a market like this, we call this a bearish market. Why? Because it's going down, right? Any candle that is going down, we call it candle. And we call it bearish candle. For a market that is going down, it's a bearish market or a downtrend. The market is trending downwards for this particular one. So you can see the nature of the structure, right? It's breaking structure to the downside. This one come down, e go up, e suppose now as e go up, e suppose break here to tell us that this thing is going up, but e didn't break here, stopped here and e went down to this place, came back, went down, then break it at this point. So it's telling us this thing is a bearish market, it's going down. If you see itself, visualizing it from your korokoro eyes, you go know say e dey go down. So this is a bearish market. Then inside your structure, market structure, you can clearly spot out supply and demand. And we say supply or demand level are places where we see a rapid move after a consolidation. So from here you see a consolidation here, See it where price choke, e chunk. So from here, after this consolidation, we see a rapid move. So this level becomes our supply level, right? So we see another one here. We see another one here. So this level is a supply level. See another one here. This level is a supply level. See another one here, supply level. Then we which one again? Which one again? See another one here, supply level. So see another supply level here. So supply level or demand level. Demand, let me show you something. Demand level, the same thing where price consolidate before a rapid move. So this is a demand level here, you get. And now the logic of supply and demand level is that price will come back to those areas before going downwards for a bearish market. For this market that is going down, we expect price to come to this place before pushing down, right? We expect price to come to this place before pushing down. We expect price to come to this place like this before pushing down. We expect price to come to this place like this before pushing down. You get. Then we have demand level in a bearish market. You get. Now every demand level is the one that is at the bottom, right? This one wey dey down na demand, the one wey dey up na supply. So every demand level in a bearish market will be violated. Violated in the sense that it will not be respected. So for instance, this supply level here, price came up, retest it, respected it and went down. Don't forget, see here we have supply level here. The logic for it, the law states that price suppose come respect those demand or supply level. So what are we expecting? We're expecting price to come and bounce here and go up. But e didn't do like that. E violated this level. How? E broke down. E didn't go up. E broke it. E break the structure. And why is that? It's just simple. That's the law. Every demand level in a bearish market will be violated, and every vice versa, every supply level in a bullish market will be violated. So for instance, this market is up, is a bullish market. What will happen? Every supply level will be violated. So take for instance this area from here to here is a bullish market. Why? Because the market is going up. So let's mark out our supply areas. We have this area is a supply level. This level, we see a rapid move here, is a supply level. This one too is a supply level. Why? Because after the consolidation, see rapid move up. This one too is a supply level. Why? After this consolidation, we see a rapid move up. So um see another supply level here. So our law states that every supply level in a bullish market will be violated. So let's find our supply level. Wait, did I just call this one supply level? They are demand, sorry, not supply. If I call them supply, they are demand. So our supply level, we have this one, a supply level here. We have another one here like this. We have another one here. So you see it, because this is a bullish market, every supply should be violated. So price respect this demand level. It came down, enter it, and then went up. E didn't come back to this one. Why? You expect it to come back in the future, right? You expect it to come back in the future. If it didn't come back, that's fine, but expect it to come back in the future, and you can see in the future it came to that place. So you see am. So let's leave that for now. So you can see for every bullish market, demand must be respected, but supply will be violated. So it came down to this place, respect this demand level, push up, violate this supply. Came down to this demand, push up, violate this supply. Came down to this demand, this is an area also, violate this supply. Then came down to this place, you can see the move. Now e didn't violate the supply, e didn't even reach the supply. So what happened? E violated this demand. Once you see a violation of demand, just know that market will soon change character. So now e change character. Shey we talked about change character now? Change character. E change character here. Now it's giving us, once market change character from bullish to bearish, it's now telling us the market, it's now saying okay, this market now is going bearish, not bullish again. So now that is bearish, what will happen? Normal logic, our supply now will be respected and demand will be violated, and that's what happened. This supply here got respected, this demand here got violated. I think that should be a little bit enough. So we'll be talking about support and resistance. You get, support and resistance is different, is a bit different from demand and supply, right? Support and resistance are places where price is respected over time. Okay, so let me use this let me use this one. You will see why this price didn't come to this supply. It didn't come to this sorry, why I like dey call this thing supply. It didn't come to this demand level, but it went up to violate this supply. The reason is support and resistance. So support and resistance is where price respected over time, multiple times, not just once. We need to see it two times. So let's start marking support levels. So if you check here, let me delete this. So if you check here, we have this place, price hit here and went down a little, then break it. Then in the future, we now see that price came down to that same level again. Let me mark it. So it came down to this same level and move up. So now it's trying to tell me that this level is a place of support. Why? Because price used it as a support to push up, right? So let me show you something real quick. So this level is price respected here, right? Instead of hitting it to go down, it didn't go down, it broke it. Once it broke it, what happened? It changed to support. It used it as support. But before, it was a resistant level. It was a resistance level because price hit it and moved down. Now it didn't move down, it broke it to the upside. So you can see when it broke it, it came down a little and retest it, use it as support to go up. Then come down again, hit it, use it as support to go up. So this is a support level, right? So let's move further. So you can see another one. We have this level here, we go ignore am because this is just first touch, right? So once we see second touch, price came down to that level and move up, we now take it as a support and resistance level. So what happen? You see that once price hit, we have two hits here. So we expect price to come and hit it and go up again. Why? Because it's a support level. Price is using as support. So you can see what happened here. Price came down, hit it, and then went up again. So this is a support level. So what do? We expect price to hit it and go up again. But then instead of hitting it and going up, price came down and break it. So now that it broke it, instead of support now, it has become resistance. Alright, let me use one analogy abi scenario now. Imagine this is a Imagine this is a room. Okay, let me do something like this. Hope say this video never don dey long. So let me do something like this. I sabi draw before. Ba, so this is a house. This is a house. So this is our ceiling here. This level is our ceiling, right? So price, support and resistance level is like a ceiling. Price came to the ceiling, hit it. What should we expect? We should expect it, since from here, from our first point, it moved down, we should expect it to move down, abi? But it came and broke the ceiling. E break am comot for the roof. So what should we expect next? Since price is not coming down from the same point, it's going forward, we should expect it to hit the ceiling and bounce up, right? So e did the same thing. It hit it and bounce up. What do we expect again? If e come dat ceiling place, e no suppose break. Make e hit and bounce go up, right? So e come, e hit, bounce go up. What should we expect again? Hit it and bounce and go up. That is what we should be expecting. But once e violated it, dis roof now, the force of dis roof will start acting downward now. So e violate am to the downside. What should we expect? Hit the roof abi the ceiling and go down, right? And you can see some momentum. E hit am, go down, then e now break the ceiling. Dis break now make dis break now don turn the ceiling to what? Support. Now not resistance again. Okay, see the logic. Price going up to the ceiling place, the ceiling will act as resistance to resist the price to go down. But if e break am,
Now the ceiling will turn to what? Support, to support the price going up. So we see a break here and a break here again. What should we expect? This place now, since e break, this place now is no longer resistance, it's a support. And you can see what happened. Price came to that point and then move up. So we have supply and demand, and then we have support and resistance. The best way to know the direction of price is not just using support and resistance or only using supply and demand, but using two of them at the same time. Okay, let's use this one now. Let's say this is a support level. I dey come make I delete this. Make I delete this one. I need food guy, I need food chop guy. So let's mark this is a demand level. We expect price to what? To bounce off this demand level, come to this place and go up. But then we have a demand level and we have a support and resistance level, right? So um e get one analogy wey I wan use but e go just make am long. No worry, let's just use. Imagine someone is using support and resistance to predict um um price movement, and you are using supply and demand. Meanwhile me, I'm using support and resistance and supply and I'm using the two of them at once. You get? So you are waiting for, you are using supply and demand, you are waiting for price to come here before you take a trade, before you say okay this price is going up. Another person is waiting for price to come to this place before he takes his trade. So you now, this is where you place your order here. You say stop loss here, take profit here. What happen? Price didn't come to that place. Why? Because you are waiting for your you are waiting for price to come to your supply level before going up. Price didn't come to that place. Why? Because of support and resistance. Then the other guy that is using support and resistance, his own is here. He's taking his order here. Stop loss here. As you can see, price came to his place and then respected his order and went up. He made profit while you missed the opportunity. But then on the long run, this is what happen. Another thing happen again. Don't forget you are waiting for this supply level ba. So see what happen. Price later came to your supply level and then went up. But him now is taking his trade from this support and resistance level. So his own will be like this. Like this. If you no understand this please, so but his own will be like this. So you can see it came, the price broke his support level and then took him out. He lose money here. But then me that I'm using support and resistance and I'm still using demand and supply at the same time, I will not take this trade. Why? Because okay, I will not take this trade at this level. Why? Because I don't have my demand level is not up to that place. It's just supply that is just support that is here. What will I do? I will look for where supply and demand is and support and resistance is. So this is where my supply and demand is, and then this is where my support and resistance level is, right? So I will not take it from here because we have a demand level here. Price might break this support and resistance level and then come down to here. And then we have another supply and support and resistance here. We have another support here. So I will expect price to come down to this place or this place. So I will take my entry from, let's say I'm taking my entry from here, which is very bad. I will explain why. But at a base level, let's say I'm taking my entry from here and then my stop loss is here. Why is my stop loss here? Because of this support level. Why? Because I'm expecting price to come all the way. I will say price might come all the way to this support level. Why? Because there's a level here to be respected, right? So, and price did just that. It came down to this support level before going up. You see, it violated my demand a little bit before going up using my support. So let's take another one. This is a support level here like this. Why? Because we have a quick move after this consolidation. Then in this support level, in this demand level, I dey mix them but I never chop. In this demand level, you see a support level again inside. See this line like this, you see a support. So Me that I'm using support and resistance and demand and supply, I will be happy to take this trade from here. Why? Because I have two confluences in one place. So I would say this is a very nice place to take a trade. Why? Because I get multiple confluences for here. So I go put my my stop loss here and then take profit here. And what happen? Price came and respect just that. So how do you identify? I don't even explain how you go identify. May I just give another example? So another example, support and resistance. Shall I explain am well? Support and resistance is just like a roof acting on a person, acting on Halima. Let's say you want to jump. You want to jump off this my room. You want to leave this place. Like this is the house. You dey try jump, you dey try jump. You hit here, you hit the roof. What will happen naturally? The roof go hit your head, you go fall down. Hit, fall down. But the moment you manage to break this roof, you will stay here. Now this roof will now act as support. Before it was acting as a resistance on you, now it's acting as a support on you. To be going up, you will now be jumping up, up, up. But the moment you mistakenly break it and fall back to the room, what will happen to the roof? It will act as resistance. So now I think that is a little bit enough. So now let's go to how to spot them. Just like I said, how do you spot them? Where you see multiple bounce. Where you see multiple bounce is how to spot them. So look very well. You see that price bounce off this level like this. Why didn't we take care? Because we didn't see any bounce initially. You see, after here, we see price break it. So in the future, there may be bounce, but initially there was no bounce. So we go to the next one. We take this one here like this. We get this level, price bounce, come down. We won't take it here. We have to see second bounce. So we now see second bounce here. It hit, came down, then move up. So what do we expect? After this break, we expect it to act as support. So it came down, hit go up, come down, hit go up, come down, hit go up. See say e dey break am, but e still dey go up. After every break, e still dey go up. So e went up, came down, break it, then go to the same area and then back down. E find demand, e find supply level, you get. So the supply and demand as support and resistance, if you want to make good use of them, you have to take them as twins. They are working hand in hand. You get, they are not different stuffs, they are working hand in hand. They are different stuff but they are working hand in hand. So let's look for another one. Okay, look at this one again. We have one bounce here, second bounce here. So this is a very good support level like this. So as e break am, what do we expect? We expect it to act as a resistance now. So we get a break here. As e break like this, see what happen? The candle went up and then resist, came down, up again, resist, came down, up again to the area, resist, came down. Then we have a break. So as e break, me ya faru ya dawo, ya ƙara, how do you put this for Hausa now? Ya ƙara haura. So as e come down, price hit here and bounce up again. So I think this concept is very well explained. But how do you spot support and resistance level from bounces? So from here we have this level. We won't take this as support level yet. Why? Because we don't have any bounce. But as price move on, move on, move on, as we see first bounce here, we see second bounce here, we now say, okay, this is a support level. Why? Because price bounce. There's something about here that price bounced, right? So we wait again. As we wait, we expect it to bounce here, but then e broke it. So what do you expect? It will now act as resistance to bounce downward. As e bounce downward, come back up, bounce down again, come back up, bounce, break am, then bounce up. The same thing keep happening like that. So what do we see in the nearest future? E hit down, up, then e start consolidating at this level. What I observe in the market is that once price respect a level multiple times, that level becomes weak. You get. So you can see it came here, there was a consolidation. Here you stay out of, you don't try to take anything here. You get, you stay out of the trade. So I will show you how I take trades for for a market like this later, but then not now. But then see what happened. See a demand level here. We have a demand level and at the same time a support level. So this is the best place to take a trade, right? So when e went up, came down to support level and demand level, e hit and go up. Makes sense. Dat last video we didn't take questions from that last video. So if you still have questions, you can ask. Then this one again. So I talked about two things that we'll be talking about. Break of structure, right? Break of structure. This one I've explained it before. I just want to rephrase it. So um okay. Break of structure. Let me use this one now. Break of structure, just like I said, break of structure is a continuation. I've explained this thing before. Let's say market is going like this, like this, like this, like this, respecting what? Respecting demand. Came up, down, respect this demand, up, down, respect this demand, up, down, respect this demand, up, come down, respect demand again. What's happening? The price is breaking, market is breaking structure. How is it breaking structure? When e went up, come down, this down wey e come like this, e leave peak level. So this level is a peak level, is a structural level. We call this peak high, or we call it higher high. The first high for the direction of the market, which is a bullish market, it means it's going high high high. Then the second high for the peak levels. So this is a higher high, this is a higher low, this is a higher high, this is a higher low, higher high, higher low. So what happened? What makes this a higher high is because it broke this structure. You get? Let's see here again. It came down, respect this demand, then went up to break this structure, create another structure here, come down, then went up again to break this structure. That's a continuation, right? Breaking this supply, break this supply, break this supply. That's a continuation. That's what we call break of structure. Some people use break of structure as a general term for change of character and break of structure, but others use it for only break of structure. I will explain what I mean. Okay, let's okay, break of structure is a type of continuation of a market trend. This is a bullish market. What makes it bullish is because the price keeps breaking structure to the upside. So it broke this structure, came down, break this structure. What are we seeing? We are seeing a break of structure to the upside. Then we have, let's say now, instead of breaking this structure, it now break the structure now to the downside. So this break of structure now, we call it a change of character. You get? That's why I say some people have different ways of calling. Some use change of character while others still use break of structure. But in real sense, change of character is a type of break of structure, right? So now that I violated this demand, what should we expecting? We should be expecting a bearish market now. How? By respecting supply. So we expect this price to come and respect this supply here. So you come and do something like this and then break the structure to the downside now. It's now violating demand now. Why? Because it's now in a bearish market. So you do something like this, respect supply here, break the structure here, respect supply here, break this structure here, something like this. So from here, we have a break of structure to the downside, which is called a change of character. So change of character is a type of break of structure that changes directional bias of the market, right? This should be enough. Right? So yeah, so now that this thing change character to the downside, it's not this high now is not called higher high, it's now called lower high. Why? The first letter for the direction, the second one for the current position. So the first one for the direction of the market is going low. So we call it a lower high because the position right now for this place is a high. So we call it lower high, first low for the direction, second high for the current place. So when you come down, this one now is a lower low. The other one up here is a lower high, the other one is a lower low, lower high, lower low. For here is a higher low, higher high, higher low, higher high, higher low, higher high. So we say a bullish market, let's go back to bullish market definition. A bullish market is a market that keeps creating higher highs and higher lows, higher highs and higher lows. While a bearish market is a market that keeps creating lower highs and lower lows, lower highs and lower lows. So let me wrap it up from here. So you can see this this is this is a market structure that is creating lower lows and lower highs. So we have a break of structure. This is our demand level. So we have a break of structure here like this. So this level broke structure here, right? So we have a supply level here again, and then our break of structure is here, right? You can see it. Instead of respecting, it broke it. So it broke structure to the downside. See the opposite side of it. This is a supply level. What do we see? We see price respecting it. You see, it came up to the supply level and then go ahead to break the structure, right? Then up again to the supply level and come down to break this structure. You see, which kind line I draw like this? You see. So now, see what happen. Instead of respecting this supply level like this to come down and break this structure, what happen? Price broke this supply level. So this kind of break of structure, we call it a change of character. Why? The character of the market is bearish, but instead of respecting it, price went ahead to change it. So it violated, making it a change of character. Can you lis ten to this again if you don't get? You get, then ask questions. If you no get this part, I don't know whether those change of character violation, all these things go too much, but then ask question or lis ten to them again. Okay. So what are we saying? Yeah, see what happen. Make I digress a little. See this level ba, when e broke, price came down to respect this level. So this level is a supply and resistance level. Why? Because e broke, came down to the level and then up again. So in the future, we expect the price to come down to this level before going up again. So yeah. So as we are saying now in VIX 75, we have a change of character, and then we are expecting price now that it changed character. We're expecting price to come down to this supply level like this. We're expecting price to do something like this. Come down and respect it here, then go up to break this structure to the upside. Come down again, go up. Yeah, and like that, like that, like that. So with this few point of mine, I hope I've not confused you, but convince you. Oh, that is how they do this thing. So yeah, hope this thing record oh. Okay. All right. That's all for today. We'll meet tomorrow. What should we be talking about tomorrow, Seth? I want to talk about trend, but they fear me the video no long. All right now.